Hello and welcome. Today is the 29th day of July 2017, and I want to talk a little bit about the Canadian US dollar cross, but I also mainly want to talk about Fibonacci upside calculations. And in this situation, I'm looking for price action to come up somewhere around here. 8506 sounds about right. For what I'm looking for on a Fibonacci upside calculation is a situation where there's an uptrend, which starts with the 2016 low, and then it corrects with a higher low in a price correction, which is down towards here at around 72. I take the high, I divide it by the low, and I put it to the root of 1.618. Multiply the low, and 8540. 8540. So 8506 didn't sound right. No, 8540. And don't be surprised how accurate this number works out to be. That doesn't mean we're going to have a continuous move and there's not going to be any down price corrections for how long it takes to make it to this play. Well, time will only tell. But let's take a look at situations in the past in which price action had a up move, go back down, and see how the calculation done in previous points. So let's start up in, say, this one here. We have a high here at about a 1004, 10,005 even. And a low in at around 923. 1059 represents the up target. 1059, somewhere around here. Somewhere at the top. It's where it found its level. Let's even go back to another one. Say, how about this this one here? You see how you go from 913 down to 845. How did this one play out? Up target 958. It still was a top. It topped here and it managed to retrace back to 926. Now in this case, 968, 923, even 922, about 1,000, which we can see here. You still could have bought back cheaper, but there was a situation in which you could say is a fail. But what's important to note about these calculations is if you don't get support or resistance where you're supposed to, oftentimes you get a fast move to the next level. And that's exactly what happened. Because it kept going. I mean, from 1 all the way to 110. I mean, a couple levels, really. But yeah, that's exactly what you expect when you go to a level where you're supposed to find support or resistance and you don't. But let's see if we continue further here. Let's see here. We have a top in at 853 or so, and a low at 785. Up target of about close to 900. And here we are again, another top. Here we have a situation of 787 top and 714 or so. Up target 836. And as we can see, it does it over and over again. more times than not, what you're going to get is just that. You're going to be somewhere near the top, and you're going to have a price correction, which can oftentimes give you chances to buy back cheaper more times than not. Here's the situation back here on the knot, but obviously it created a failed, that fast move obviously came down pretty hard. But when you see the situation of the market having, like I state, an up move go down to a higher low, that's when you can expect to have it. Now here's a situation where this thing broke again, because we'll do a Fibonacci downside now. We're looking for a downtrend to go higher to make a lower high, which is the case in here. So what's the low here? 888. And obviously the answer is going to be it's going to break through the key level. And then the high is about 942. So down target is 856. And again, you think it's down too much here? Well, in this case, it wasn't. The best you've had to buy back was back in here, a little bit here, again now, and of course the current price objective is to pretty much buy back towards that level. So there's the situations where if it doesn't work, it can really, it can come down to hurt just a little bit. So always part of the risk reward management, or part of the game of trading. All right, thank you, and have yourself a great day. Bye-bye.